Facebook. Good morning, we are live. It's been a while. I think it was last week I did a market review, but I wanted to do a little video now. This is an interesting one, and this one is entitled, I Didn't Know I Would Lose So Quickly. And the reason for this one is one of my trading room students sent me a link, and that link was actually from an article on the BBC website where it was talking about people who during lockdown have decided to give trading a go. So they've gone on to these Robinhood trading sites and they're having a go at short-term trading, and how the article was explaining basically how the guy involved didn't realise how quickly he could lose money. And obviously what the article's doing is highlighting the perils of trading and why you shouldn't do it. And essentially, the core element of the article is good, talking about the fact that you can lose money very quickly. And I was actually doing a training last night where I was talking about one of the benefits of trading is that you can be in and out of the market very quickly and you can make money very quickly. But obviously the counter of that is also true, that you can lose money. So I often have people come to me when they're in that position. And recently, obviously with lockdown, more people wanting to get involved in trading, more people trying it and losing money. I've had more of those similar conversations where people didn't understand risk. But I think the first and most important thing is a lot of people give it quote unquote a try. So they will try or have a go at trading. Now the challenge with that is straight away, you come in with a mindset of somebody that is not fully committed. Now, there's no guarantee because you are fully committed versus trying trading that you're going to be managing risk correctly. But you are way, way more likely in a scenario like that, if you are focused and doing it properly and coming at it with the right mindset, that you're way more likely to have taken the time to manage risk correctly. But there is no guarantee on that. This is why it's so important that protecting capital is one of the most important things you can do. So we say to people, never trade out of fear, because a lot of what would have happened to these people, and I've seen the cycle, is that they would have got their risk completely wrong, lost money, but then quickly got into the gambling mentality and say they didn't realize they could lose money so quickly, but probably didn't have any sort of strategy and woke up and realized that they placed 10 or 15 trades that day, or 10 or 15 trades in the last couple of days, completely got their risk wrong and completely came at it from the wrong way. So we have a rule, never trade out of fear, but another rule that we have is never trade at extremes, whether it's a negative based emotion or a positive based emotion. So in terms of it, imagine it like a pendulum. As a trader, if you start to feel yourself getting overly positive, overly sure about what you think will happen to your trades, or you're overly negative and you've swung that pendulum almost 20 degrees past center in either direction, that's when you have to be careful, because that's when you are way more likely to break your rules, or on top of that, you're way more likely to make a mistake. So another reason I think that people have got in such a mess because they've turned to trading is a lot of them will have already had an interest in some sort of investment. So it's likely, and I've had people come to me who've done exactly this, that they've gone out and prior to trying trading, what they've done is they've been invested in shares. So the challenge there is, let's say you've got a £10,000 account and you want to invest that into shares because you want to buy shares, whether it's the medium term, the long term, or you're trying to make money over the short term on shares. It's highly likely, because you're owning those shares rather than trading a contract, so you're actually owning the share rather than a derivative, it's much more likely that you'll have, say, 9,000, 90% of that 10,000 actually out there in positions holding shares with maybe only 10% of it in cash, or you might have the whole lot. So what that does is that conditions you, because you're owning something underneath it, that conditions you to have that money out in the market, because the more of the money that's in those positions, then the greater return. And the fact you underlyingly own something, you own the underlying asset, what that means is there's an element of value there. So the trouble is, people then come to trading and they think that they're going to be cautious in the way that they do it. So they're going to take a cautious approach. So they'll say, well, look, I won't be risky, I'll be cautious. And instead of having 90% of my 10,000 capital out there in the market, I'm only going to risk 10% on this trade, because obviously trading is more risky. I'm in this for the short term. But the challenge there is, if they have 5 losing trades in a row, even with what they think is a cautious risk, i.e. 10% of their market, 10% of their capital out there, they've only got, if they have 5 losing trades, they've wiped out 50% of their profit, and then they've got to get 100% return. Just think about that for a second. They have 5 losing trades because they think they're being cautious, only risking 10% per trade. But on the simple math principle, at that point, they're 50% down. Just to get back to where they were, they've got to have 100% return to get back to where they started. So this is how people without the correct risk management process and the discipline to stick to it, this is how these guys and girls end up losing money so quickly. And it's a real shame, because if they took the time to learn from us or somebody that teaches risk management correctly, they would be able to get in, make mistakes, maybe break their rules a couple of times like most traders do, go through essentially all of those learning processes and sticky points, not so they come out the other side and they're winning every time, but when they are winning, they're winning correctly, and when they are losing, they're losing correctly, because there's a skill to losing as well. And if they were managing their risk correctly, and one, they knew how to calculate their risk and they were sticking to it, they will be able to get through it. Because we have a little rule at Trader Support Club, is we teach all of our traders, regardless of their previous experience and regardless of how successful they are once they're with us, we still say to the guys in our trading room and all of our levels, you want to set your risk management up so you're the dumbest trader on earth. So that even if you're going through a bad performing period, those losses don't account to 20, 30, 50% of your account value. Because even if that happens, or if that happens to you, even if you're a good trader, you're going to have to do extremely well to get yourself back up to that point. So I really want you to think about that. Are you spending a lot of time looking at your technicals, looking at all of the different strategies you trade, but at the expense of not managing your risk correctly? So if you're completely new to trading, your top rule is protect your capital and have a system to do it. As you get more sophisticated, those of you that are working with us in our trading room, you'll know that your number one rule is actually to protect your confidence, because by that point, protecting your capital should be an absolute given. And then, how do you take that to the next level? How do you know that risking 1% is the right level to risk on this strategy, or risking 0.5%? Well, one of the main factors is trade frequency. So how often are you trading? And also, what are the inevitable drawdowns that every single strategy has? And the only way you can get to a point where you're clear on this is data. So you've got to track the trades you're in, or if you're trading a new strategy, don't take anybody's word from it. Don't take mine, don't take any other traders. Make sure you test that strategy yourself. I've literally just got an email through from one of our Kickstart students that finished a couple of weeks ago, and he's just done 100 back tests on the strategy that he's going to trade, because he said, I am not going to go out and trade that until I know the relevant ups and downs, the drawdowns, the winning periods, how those trades have been playing out in the market, because not only is that going to give me confidence, I'm going to be able to know what capital I can risk on that trade. All right. So, hope that was useful. I'm actually going to be back tomorrow, and we're going to be doing a market review and looking at some of the live trades that I'm currently running. Trade safe. I'll catch up with you soon.